to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. We're seeing a bit of a bounce in Bitcoin step this morning from yesterday's rebound.
Yeah.
Not so bad. Well,
a dead cat bounce.
Dead cat bounce. Always on the bright side. Checking in on Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 34,196. Bitcoin is up almost 14% over the past 24 hours, and the CoinDesk Ether price ETX index is at 2010. ETH is up about 13.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Dead cat bounce. All right. So what will this last, or what's going to happen, Lawrence?
Yeah, we don't really know. I mean, of course, with anything with Bitcoin, it's like, if you just wait around a while, the price that you have as a target will eventually be seen. Either on the upside or the downside. So it was oversold. That's what the technical charts are showing us. But it seems like 30,000 is kind of like where everybody likes it for now. We might see some resistance up in the 36s or so. But there was a rebound in all the CoinDesk 20 assets. So it's not just Bitcoin, it's all across the board. Nonetheless, we may be languishing here for some time because we've got to wait for a catalyst of some sort. But interesting to note, by the way, MicroStrategy's bonds, where they bought Bitcoin using these bonds, trading below par. So that's telling us, at least for now, that the market is not too thrilled with leverage.
Right. I'm just reading some headlines as well. Bloomberg saying that Qatar's wealth fund, they believe crypto still needs some time to mature after its volatility, as well as we're looking at China. They're cracking down on trading, mining. Emily, is there any sense that in China things are different this time?
That is really the million-dollar question. I think there's a sense that it's different in that they appear to be more serious about enforcement. But the question is this something that is going to last? Or sometimes China sends these signals and they seem really strict, and then it kind of gets a little bit less strict, or it's impossible to know with China. So I think people are very spooked. I think the mining crackdown is different from previous times, though.
Well, we've seen a lot of these headlines out of China: fear, uncertainty, doubt, banning this, banning that. And so we'll see how it moves forward. We've still seen the crypto community thrive there. But our first guest is a vocal Bitcoin critic saying, quote, BTC is a highly speculative asset with a fundamental value of zero. And speaking out against El Salvador's recent Bitcoin law making Bitcoin legal tender. Joining us now is Steve Hanke, Senior Fellow and Director of the Troubled Currencies Project at the Cato Institute and Economics Professor at Johns Hopkins University. Welcome to the show, Steve. So, I was looking at your tweet. What are your thoughts on Bitcoin's price? I mean, we saw a huge fall yesterday. Now it's kind of rebounding. Do you really think, though, it's going to go down to zero?
Well, eventually it will. There will be superior competitors, and those competitors will literally evaporate the demand. And since the supply curve is totally inelastic and vertical, if the demand collapses, there's only one way for the price to go, and that's down to the floor. As far as the short run goes, I think Lawrence gave an excellent summary of the situation. And as you remarked, Christine, we had a 14% move in the last 24 hours. Now, if that isn't a speculative price move, I've never seen one. There's really very little to talk about. It is a speculative asset. There's no question about it. And I think your introduction by both of you just nailed it. I mean, you're just reporting the facts. That's what it is.
So,
go ahead, Lawrence.
No, so well, I'll let you go, Emily.
Okay, yeah, I just wanted to talk about your El Salvador argument for a moment, and then we can return back to sort of Bitcoin's value. So on El Salvador, you've been very critical of this move because, it's saying that this is basically forcing people to accept Bitcoin. I'm just curious how you see the other side of that argument, which is that, Bitcoin is a hedge against government controls, particularly authoritarian control. So like the pro-Bitcoin argument here is that, A, it can be used, in authoritarian countries. It's a way for people to have their money to sort of be independent of the bank and of the government and have money that is not subject to government control. And also it can serve as a hedge against hyperinflation in countries like Venezuela because they are able to basically have a hedge against the national currency. So I'm just curious how you see those arguments.
Well, those are things that you see at a revival meeting, and the true believers spit these things up. Let's talk about El Salvador because they actually have a law. And if you read the law, it's an extremely authoritarian law. You have a lot of these libertarian folks swirling around in the, as you call it, the Bitcoin ecosystem. And in fact, they're true believers and fundamentally little authoritarians. And that law, Article 7, is not a legal tender law. It is a forced tender law. It's like the old Soviet code. It's like military occupation codes where a buyer and a seller aren't free to decide what currency they will use in transactions. And legal tender, by the way, is only restricted to the payment of taxes and settlement of debt, not day-to-day transactions. And Article 7 in El Salvador is focused specifically on day-to-day transactions. If you bring a bag of Bitcoins in and you want to buy something, the seller has to take them, whether he wants to or not. Now, to enforce that, of course, is going to be another story because the little authoritarians haven't figured that out. You need Bitcoin police to enforce forced tender laws, and they don't have Bitcoin police in El Salvador. And furthermore, the corruption is thick as thieves down there, and there's no conceivable way they could formulate a police force to police this kind of thing.
So, Steve,
and
when you look at it,
the broader question is, if you're worried about hyperinflation, and by the way, that I'm the one who studied all the hyperinflations and have produced the 62 episodes that have occurred in history, and I can tell you what they want is the international currency that is in the play at the time the hyperinflation picks up. And that's why in Venezuela, 80% of all the transactions, are actually occurring in US dollars. People want greenbacks. In all these troubled currency situations, they go for the greenback and they dollarize the place. The cryptos are a little footnote. It gives you a lot to talk about in the morning shows and so forth, but it doesn't.
Does David Bose know that you are so pro greenback versus private currency? I mean, isn't this basically a lot better to have the market determine the use and the value of a private currency versus a fiat currency, something that is dictated by a central government, in this case, the United States? Now, when you look at the forced acceptance of Bitcoin, it doesn't have much teeth, right? With forced tender, it doesn't have much teeth because there has to be a party that can be able to accept it. So, I mean, why go against necessarily allowing a country to say, hey, you can accept Bitcoin too? And, it's a private currency. Why do we have to force them to accept dollars and otherwise?
Oh, I have no brief against private banking and private currencies. And in fact, by the way, about 90% of the broad money supply in the United States is private money. It's produced by commercial banks. It's not produced by the Fed. The unit of account is the U.S. dollar, but the actual supply of U.S. dollars is dominated by the commercial banking system. And if I have a big problem with El Salvador because of forced tender. That has nothing to do with cryptos or Bitcoin or anything else. It's forcing someone and abrogating voluntary exchange between two parties. So that's a problem. It's a very authoritarian law. It's not a legal tender law as reported in the press. It's a forced tender law. But private cryptos, the problem with cryptos is that everyone, in fact, wants to ultimately obtain some sort of legal tender, like the US dollar, the euro, the pound sterling, the Swissy, that kind of thing. And it's hard to do. It costs, it takes time, it's complicated. So the best kind of crypto is the type I propose that would be a currency board crypto, in which the crypto would be issued by the issuer. It would trade at a fixed exchange rate with an anchor currency, and the anchor currency could be any anchor that you want. That's a great anchor. It could even be something that's not even issued by a sovereign. It could be gold. You could have a gold-backed crypto. It would trade at a fixed exchange rate, again, with full convertibility, with the anchor.
So you're not talking about central bank digital currencies, or you're talking more about stable coins?
No, I said you could choose anything you want, including gold. Gold is not a central bank currency. And if you did that and backed the crypto 100% with the anchor, it would be a totally foolproof thing that would be highly used, and of course it would drive the Bitcoin out of the market in a hurry. There have been 70 currency boards in the world historically, and none have failed. Even the one that was installed in the Civil War years in Russia by John Maynard Keynes, the North Russian currency board, operated perfectly and redeemed all the North Russian rubles that were submitted to it, even after the Civil War.
Wasn't
even
Argentina a problem?
No, Argentina did not have a currency board. It had a convertibility system in which the currency was not backed 100%, and they had tremendous discretionary power at the central bank. A bank with a currency board, you have no discretionary power. You only have assets on the assets. The only assets you have are anchor currency or anchor, if it was gold, and gold.
Steve, I wonder what you say to the Bitcoin community that says, over time, the volatility of Bitcoin has been reducing, and it has a community. It won't go to zero because the community is really strong. It believes in Bitcoin. There are miners out there. There's an ecosystem, a Bitcoin ecosystem, as you mentioned. So what do you say to those people?
Well, it's a religion, so it behaves exactly like a religious movement.
Oh.
There's absolutely no difference between it's a new religion and you have a lot of
if it's a religion, they're going to make sure that the coin succeeds, because money is a trust system, and if everyone believes in a currency, in a store of value, medium of exchange, unit of account, they're going to use it.
That's true. If you have true believers, they will. There's no question about it. Look at what the objective price is. I said the fundamental value of Bitcoin is zero, but the objective price of Bitcoin is what the market price is. Lawrence went over this morning.
All right.
That's
So it's not zero. The value of Bitcoin is not zero. I mean, it's just people have been predicting
it's not zero for now, but
for about I mean, it's not zero, and all these institutions and banks that have been investing in Bitcoin, it's just hard to believe that all their investments are going to go to zero. And as Christine just said, the money is defined by people who are willing to pay for it, and there's a huge community around the world, and people have been predicting Bitcoin's demise for 10 years, and they've all been wrong. So, I mean, I guess we'll see, but it's not that convincing to me.
I'm not into the short-term prediction game. I mean, as Lawrence said, the thing is all over the map in the last 24 hours. I'm just saying, eventually, this is a competitive market, And since everybody believes in free markets and all of these wonderful things, the free market will be open to competitors that, in my judgment, will be superior to Bitcoin. And if that's the case, the demand will wither away, and the demand curve will collapse down to the floor, and the price will be something approximating zero.
We got to wrap it up there, but thank you very much,
Thanks,
Steve, for joining us. Always appreciate different varying opinions.
Thank you. Good to be with you.
All right, that was Steve Hanke, economist at the Cato Institute and Johns Hopkins University. Coming up, checking in on Asia and the crypto markets close up with privacy coin Monero. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, June 23rd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, Korea's largest crypto exchange faces a lawsuit. Iran seizes 7,000 mining machines, and Ant Group launches its own NFT platform. Let's get you up to speed from Asia to the world. South Korea's biggest crypto exchange, Upbit, seems to be in hot water once again. This time it's looking at a patent infringement lawsuit. A foundation belonging to the Seoul University of Foreign Studies has accused the exchange of violating a patent on an e-wallet system for safe virtual asset transactions. Now, the foundation has asked the court to impose a ban on the use of these in Upbit's operations, which essentially means stopping all of Upbit's core services. Well, Upbit says not so fast. In a statement to Forecast News, Upbit denied any infringement and said, if needed, quote, it will be very easy to prove prior use because Upbit was released much earlier than the patent filing date. But we also tracked down the other side here. Forecast News spoke with one university official who's involved in the lawsuit who asked to remain anonymous. He refuted Upbit's claims, saying Upbit had only started to provide the services in question more recently, especially in preparation for the government's new crypto law. The university believes the patent filing predates any Upbit developments for transaction security, it says, and said it will continue to take strong measures to protect its patent rights. Well, Bitcoin getting banged up a bit this week, dropping below the $30,000 mark for the first time in 6 months. On Tuesday, it fell to $28,800 US before bouncing back 12 hours later to over $34,000. BTC had already been in the trenches when China's central bank on Monday called on some of the country's largest institutions to crack down harder on trading in crypto. Justin Danathan, head of exchange sales at Hong Kong-based Equinix, sees retail investors hitting the sell button.
Retail investors, the people who bought towards the top in the mid 50Ks, even maybe early 60Ks, are feeling very desperate about their holdings being halved, essentially, right? And so they're giving into the fear and selling. I actually think that most of the buying is done by institutional players that maybe missed the long bull run.
Danathan says that because the focus is on Bitcoin right now, people might end up taking bets away from altcoins like Ethereum in the process. So just how did Bitcoin end the day today here in Asia? In the green, closing up just over 4.2%, 4 p.m. local Hong Kong time. And in the top 10 for cryptocurrencies, lots of green here as well. Cardano up nearly 7%, and Dogecoin proving it still has some bark left, ending the day up just under 8%. Meanwhile, Iranian authorities have seized 7,000 mining machines at an illegal farm located just west of Tehran. That's according to Reuters, which cited state media reports. In an attempt to reduce the number of power blackouts, Iran in May issued a temporary ban on crypto mining for 4 months. A study from Elliptic, a blockchain analytics company, found that around 4.5% of all Bitcoin mining operations in the country were giving Tehran a chance to buy millions in crypto, which can be used to buy imports, thus helping offset the impact of US-led sanctions that have been hammering Tehran's energy sector and the broader economy. And finally, one of China's payment services, ALIPAY, is launching its own NFT platform, and it's as easy as swiping purchase on your mobile phone. It's available within the app itself and will be facilitating the sales of NFT pieces. So here's how it works. The collections currently available are images of flying apsaras and sacred deer from the Dunhuang Fine Arts Institute. Each of them only costs 9.9 yuan or $1.50 US plus 10 Alipay points gained from daily transactions. And owners can use their unique NFT art as a background for their QR code, which, you can flash around next time you use your payment app or share your contact. The NFT service features owner Ant Group's very own blockchain technology, AntChain, which was founded back in 2015. For now, payments will have to be made in yuan, though, and no virtual currency will be accepted yet. Seems like it's already a hit, though. They're sold out. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Bitcoin's on an advance. Let's take a look at a live look at Bitcoin. It's trading at $34,672. Bitcoin is up about 17% over the past 24 hours, and the CoinDesk Ether Price ETX Index is at 2032. ETH also climbing almost 14.6%. Over the past 24 hours, and privacy coin Monero right now at $223. Monero also skyrocketing about 19% over the past 24 hours. Privacy coin Monero is becoming the cryptocurrency of choice among cybercriminals, according to a report from FT. The protocol gives users elevated privacy by obscuring transactions between senders and receivers. Joining us now to discuss is Vic Sharma, CEO of Cake Wallet, which was created in part to help users use and store Monero. Welcome to the show, Vic. So, just off the bat, I want to get your comment on the price of Monero. Relative to Bitcoin and other cryptocurrencies, does Monero move any differently or pretty much in line with the crypto markets?
It seems to be moving in line with the crypto markets. The question always is, why isn't Monero price going up? And as your previous segment shows, most of the top 10 coin market cap are all DeFi coins. So I guess that shows right now people are in crypto just to make money, and that's about it.
Is Monero the crypto of choice among cybercriminals? What are your thoughts on that? Do you agree, or?
I mean, it seems to be going that way. However, I think Bitcoin is still the number one choice of cybercriminals. Cash probably being number one right now for criminals. So, the features Monero offers, it probably lends itself to for criminals to protect their activities. But 10 years ago, you read the same thing about Bitcoin.
Do you see that changing? Rarible, a Russian cybercriminal group, is reportedly only accepting ransoms in Monero. Colonial Pipeline ransomware attackers asked to be paid in Monero, but accepted Bitcoin at a premium. So do you see this as a trend?
Unfortunately, it probably will become a trend. It is a double-edged sword. I think what Monero offers in terms of privacy for everyday use, for what you're buying, what you're not buying. But, again, it is a double-edged sword. But, so is cash, so is Bitcoin.
Just a sort of larger question about the markets. This whole kind of these ransomware incidents, and we're starting to hear more policymakers talk about how crypto is playing a role in crime and ransomware. What do you see as the impact on the market? I mean, is this something that's going to spook institutional investors, or just have a downward effect on the market going forward?
That is a very good question. I mean, you're seeing the results of that already. A lot of exchanges are dropping Monero for that reason. But overall in the crypto space, I think this will be a net positive. Having private transactions, having your balance not being revealed, I think all these things will have a net positive in the end.
So besides pirates and hooligans and criminals, who else is using Monero? Who are the buyers? Who are the sellers? What do we know about them? Are they institutional, retail? What's the geographic breakdown as well?
Well, I mean, that's the thing about Monero. You can't tell, right? That's the whole characteristic of Monero. But at least from the wallet side, I can tell you, downloads wise, still over 50-60% of our downloads are in the US. So majority of the Monero users seem to be US based.
And size wise, you don't know anything about the size of the holdings, the average size of the holdings, things like that.
Again, a rich list and all that, you can't see that in Monero. And if you follow any of the Monero Twitter accounts, there's always a joke going on. Look at this rich list, right, and you look at it and it's all blank. You can't see how much each wallet is holding.
Monero gets a lot of press related to, it's being used by cyber criminals, but what are some of the, why are you behind it? Why do you think that this is an important cryptocurrency to elevate?
I think the way you spend your money and use your money is a private matter and should remain private. The same way as right now, when you go pay for something with your credit card, you don't want to show your whole balance in your bank account or your balance on your credit card. You don't want the receiver to be able to see all your transactions and all those transactions going back infinity. So that's why I'm a proponent of Monero.
All right. Unfortunately, we've got to wrap it up there, but thank you very much, Vic, for joining us for this segment.
Oh, thanks for having me on.
Right, that was Vic Sharma, CEO of Cake Wallet. Coming up, checking the NFT marketplace with Rarible, plus the CoinDesk Global Policy and Regulation Update with Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick. So you have a story out on Treasury nominees who are pledging to enforce new crypto regulations. They're doing hearings right now in DC. What's going on?
Yeah, yesterday the Senate Banking Committee held a hearing for Ryan Nelson and Elizabeth Rosenberg, who have both been nominated to financial crimes roles within the Treasury Department. And during the hearing, U.S. Senator Catherine Cortez Masto asked, how they would handle cryptocurrency, particularly in light of, just this renewed focus given crypto's use in certain recent, high prominent cyber crimes, i.e. ransomware attacks. And both candidates did have some comments. Ryan Nelson, in particular, pledged to enforce new crypto-related regulations that are, encoded within the Anti-Money Laundering Act of 2020. Should he be confirmed, Elizabeth Rosenberg likewise said, if she is confirmed, she will work with international partners to ensure that there is uniform regulation around crypto, and companies, or I guess malicious actors in this case, can't just hide from the U.S. by operating out of a different country.
So what does that give? Does that give us an indication on what the Biden administration, how they view crypto in general? I mean, are we getting any more indications from these kind of nominees of the general tenor of how they're going to be regulating, if they're going to be regulating crypto at all?
This doesn't really feel new, to be honest. Janet Yellen, when she was facing her own confirmation hearing process, she said much the same. She complained about crypto being used in cybercrimes and terrorist activity. And these two candidates, in particular, they're dealing with financial crimes. If they're confirmed, they're going to be part of the Treasury's financial crime enforcement, offices. So this doesn't feel like a surprise. The other side of the coin, though, is, if there is better regulation or better oversight and the U.S. government is more comfortable with how it's regulating crypto, that may increase the chances of more regulated products being approved, i.e., Bitcoin ETFs. So it's kind of a double-edged sword. I think it's probably a little too early to, or I don't think you can read too much into what they're saying regarding the Biden administration's priorities. And again, the other side of that, of course, is also they are talking about a law that was passed by Congress last year. So it was signed by the previous president.
All right. Thank you very much, Nick, for the update.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, Rarible raising over $14 million in a Series A funding round led by Venrock and CoinFund. Funding will go towards hiring new staff and building a community-owned blockchain-based NFT marketplace. Joining us now from Rarible is Alexei Fallon. Welcome to the show, Alexei.
Hey.
All right, so one of the questions I want to ask you is, how do you make NFTs more accessible to artists? I know an artist, she isn't so well versed in tech and crypto per se, and is finding it really difficult to get onto these platforms and try to, in a more mainstream way, find how to adopt this technology. How do you make it more accessible?
Yes, totally. This is all true. And now it's really hard for mainstream users to use the platforms, like any platform currently. And this is the new big challenge for the whole NFT space, to adopt new technologies to make this.
So what do we do about it?
Much easier. Yeah, so our goal is to adopt fiat payments such as credit cards, and also adopt new blockchains that are cheap and very fast.
But I mean, even just getting onto the platform is difficult for them. I mean, many just don't know the first thing.
Sure, but currently people just don't know this conception of self-custodian wallets. So we are going to read out of this so that user can log in and have options to log in with their custodian wallet, like self-custody wallet, or just to log in with same old login and password. So it's kind of another way to log in, and then you can pay or mint even for free. Right now, it's actually possible on Rarible, so you can mint for free, which is much easier because you don't have to buy ETH, and this is a big pain for mainstream users who will never most crypto.
Alexei, we hear about the NFT market softening. How are your transactions in this quarter versus the previous one?
Yes, this is true. We are seeing a slightly drop as the whole market is cooling down from the hype, and we think it's pretty normal and healthy situation. So right now we're seeing somewhere around 20% drop to previous months in volumes.
I'm just curious, you mentioned quickly other blockchains. Can you just expand on what you mean about that?
Yeah, sure. So we're partnering with Flow blockchain, and also we're looking to integrate other blockchains, which are EVM compatible first, and then which are cheap and environmentally friendly.
All right, we got to wrap it there. But Alexei, thank you for joining us this morning, and congratulations on the raise.
Yeah, thank you.
Right, that was Rarible CEO and co-founder Alexei Fallon. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.